Good morning, traders. It is 8 a.m. on Friday, the 16th of December, 2022. Thanks for joining me. Happy Friday, everybody. It is Triple Witching Friday. Triple Witching Friday. That means that the futures contracts, the options on futures, as well as the options on equities all expire. It used to be quad witching. Does anybody know why it was called quad witching and is now triple witching? Let's see. Let's test your trivia, your trading trivia. Why was it called quad witching and now it's called triple witching? What has changed? Let's see if you know. This is episode number 2379. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. That's right. Single stock futures kind of failed as a product, and so they used to expire on this day and they no longer exist. So it went from quad witching to triple witching. Although, man, single stock futures would have been a cool thing to have, right? I mean, to be able to just trade the futures long, short on the underlying equities. But I guess it got complicated with the SEC and all. So here's what we've got today. We've got risk-off sentiment. It's it's not terrible. 1% on the S&P and the Dow. 45 basis points on the NASDAQ. 1% on the Russell. 1% off on the Euro stocks, and 0.66 or 66 basis points on the German DAX. Crude has taken a turn and is dropping 3% yesterday, put in a turn down, and a very crude. I got to tell you, crude has been just the price action in there is almost like something out of a technical analysis book. We breached the one-time framing up yesterday, and here we are selling off this morning. So with an internal gap, actually it was an external gap this morning that touched yesterday's low. Actually, no, it hasn't. It is still an external gap this morning. One thing to note about crude is that it rolled today. The front month for crude, if you are a crude oil watcher or trader, the front month is CLG3, and that would be February 2023. The premium difference between the January and February contract is plus 4 cents, plus $0.04, $0.04. So you would have to adjust all the old contracts up by 4 cents. In terms of key earnings, Accenture reporting pre-market. Accenture came in at $3.08, was expected at $2.91 on $15.748 billion. They beat their earnings, the revenue number by 1%. They beat their earnings number by 5.8%. Darden Restaurants is the other one. This is $2.48 billion of revenue. Hang on one second. I gotta clear my throat. Sorry. So those are the two. Nothing after the market. Nothing major. Neptune Wellness Solutions, something like that, $9 million. So they're not going to make it on the list, but I'm giving them a little shout out anyway. Again, triple witching. Yesterday, the ECB was pretty hawkish. They raised 50 basis points, and there were comments for quite some time yesterday. It seemed like they were commenting forever. But the general gist of it is that they're pretty hawkish. Retail sector concerns, of course. We saw retail sales yesterday take a bit of a hit. Goldman Sachs says it'll lay off 4,000 employees due to difficult market conditions. So that just came out a little bit ago. It came out at 6:39 Central, 7:39 Eastern. It's 8% of Goldman's workforce, and it's pretty significant. And then finally, Boeing is close to a deal to sell 190 737 MAX jets, 3787 Dreamliners, and some 777X jets to Air India. So that's a big order for the Washington company, and that's that. Looking at the calendar, really the overnight session, relatively dull retail sales out of Great Britain. Um, Came in at negative 0.4%. Consensus was plus 0.3. And then other than that, we did get some S&P Global Manufacturing and Services PMIs for France, Germany, the Eurozone. They're not really significant. The inflation rate out of Europe came in at 10.1% versus 10% expected, and the S&P also gets its S&P Global Composite Manufacturing and Services PMIs, and then we have Fed's daily at 12, Baker Hughes to close off the week. So that's where we stand. While we're here, and because we haven't done this for a while, I'd like you to take a moment and type in where you're from. What city, state / province and country are you from? And if you want to be contacted, do not put in a phone number. Do not put in an email. It will be harvested by robots and you'll be spammed. So do not post emails or phone numbers. But what you can do is post your Twitter or Instagram or Telegram or whatever you want, and then that gives an opportunity to other traders to kind of reach out if they're in the area. I'd love to see more and more traders connect no matter where you are. So look around, look at the list in the live chat and see if there's anybody close by and see if you can make contact. If you could not, you can just drop me a note at futurestrader71.com/contact, and we'll try to reach out if we have information on that person. So we'll have to get permission for that, of course. So thanks for doing that. S&P 294,000 contracts. The inventory 79% short. 79% of the volume occurred below the close. We left the close behind. We reopened right at balance at the bottom of yesterday's range, and we ran away from it, and we have another gap today. Gap rules apply again. If you're at Convergent Trading, you should have attended the Anatomy of a Trade study hall yesterday, and or at least listen to it, because the same situation applies here. We went over gaps and the two key gap setups. We walked through a trade involving the gap yesterday. Be sure to watch that. We have the same situation today. The range 63.25 points. The point of control shifting dramatically down to 38.89. Note we're trading the low at 30. We're at the low at 38.71 So we've moved quite a ways from 41.41 from where we were a couple days ago. This was expected. I talked about this for quite some time. It was absolutely expected, and here we are right now. So this is NASDAQ. This is the S&P. So let's look at the big picture here on Edge Pro X. So what do we have here? We have, again, I'm going to run through it. We have a market that, the adjustment, oh, this is the NASDAQ. I was going to say the adjustment's incorrect here for some reason. Prices didn't look right, but that was the NASDAQ. Again, I'm going to run through this as I have before, just as a refresher. We had a high in the 41.40 range. We went up to 41.41. We were in balance basically in here. All of this is balanced, but we had this impulse down, consolidation. The expectation is continuation lower. So what has happened? The continuation lower never took place, because on Tuesday we had CPI, we had a gap up, boom, right? went to 41. We went to the extreme of the range and sold off, came right almost back to the 25.26 right here. Beautiful action. Closed. Then the next day we opened, hung out within the CPI range, and it looked like this impulse. I'm going to put an impulse arrow here. Impulse pullback continuation trade was not going to materialize because we canceled it with the CPI release, and then the Fed comes in, pushes us through the 25.30 area and down into the 4,000. We almost got to 39.90. We got to 97 on the low here, 97. And then yesterday we gapped. We opened, attempted to push higher. We had a nice little impulse on the open. I'll go over that. And then, just as we had expected, we're looking for, what was the number? 46. 39.46. Let's do the whole handle here. 39.46. 33.5 below. 08 below that. And so the cookie crumbles, right? And so this is where we are. And then the next support here is 39.01. You could see the 39.01 being right here, tiny little gap. 39.01, that's the next key support. But what we had done is we had a huge disruption from news, CPI, FOMC, and then we came back to the SOC of the prior day. We came back to the balance of the prior day, and what we've done is exactly what I've talked about when it comes to the scene of the crime, which is to resume the auction, which was to the downside. So this is why this was expected throughout that chop before the CPI, and now we're in it. And the targets for this are all the way down into the 38.20, the extended target. So we're looking for us to move from the upper distribution up here to this lower distribution and to repair some of these structures down below. So the expectation is this is very likely to try to respond. There are some pieces, tricky pieces here in the overnight session, in yesterday's session I'd like to talk about, and that is the fact that we had sold off yesterday, but the delta kept going up. And there are two things that are in play here. One, triple witching, expiration. The delta, although most of the open interest had shifted, 96% of it had shifted to the front month as of the open yesterday, you still have this effect of hedging delta, hedging an option delta, because the options expire this morning at 8:30 Central or at the close at 3 p.m. today, depending on the type of option that it is. And so we'll get some delta hedging throughout the session today. And so we have this weird anomaly. So let's take a look at that. This weird anomaly that's taking place. This is NQ. Here's the ES. So look at this ES right here. The ES, this is yesterday's open. This is the cash open. ES goes up to 85 and a quarter. Remember, we said anywhere between up to the 90, we're looking to get short. 80 to 90, that area, looking to get short. That was the main idea. Back to 46, which was up here, right here. But look at what the delta did. The delta went up. The delta went up with price early on. Pretty strong up delta. And then it dropped with this impulse down. But it poked its head, the cumulative delta poked its head below zero at the 33.50, 39.33.50. And as the market went sideways, there's aggressor buying in the delta. Keep your eye on the blue and orange lines. Okay, not on the dashed lines, but on the sticks themselves. And then price continues to fall, and look at the delta. It makes a peak, and it remains positive. Prices fall some more, remains positive, but sideways. Price shoots up. The delta remains sideways. And then on the close, we trade the cash close is right here. We trade down on the cash close, and then the delta is shooting up to the high of day, positive 14,000 contracts on the session. So as price is moving down, the aggressor is lifting. Now that lifting is not getting much done because there are limit offers that are being filled, and they kept price down. But this structure, this zipper structure right here, the retest of the zipper structure down into 18, so it went to 1917, and the fact that it went positive had me thinking that this could be a foundation, a base. It is a weakish low, but this could be a foundation, a base for a reversion back to at least 39.70, if not 39.90. So this morning we come in, we go sideways, 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 and then we start to sell off again with the European Treasury open. The Bund starts trading here, and we just start to sell off, and then this time the delta is in sympathy with that. So this is kind of not so, I don't want to say it's typical as if I foresaw it. I didn't, but during expiration, these kinds of shenanigans kind of go on. And so yesterday I was relatively confident that the buyers might step in and kind of squeeze higher today. Things were shaping up that way. Looking at the big picture, there's CPI, there's FOMC, there's the gap, and we have run away from this big balance. But look at where we are. We're still inside of this major balance zone going back to November 10th. We're still in this zone, and it's very important to see what it does. And what it did overnight is, excuse me one second. And what it did overnight is it exceeded the edge, the extreme of this balance to November 10th, and is actually solidly in this big profile that we were stuck in throughout October. And the balance there, the point of control there is 66.67. So if you recall, the overnight low is 71 and a quarter. 66.5 is this point of control. So we've left balance. We are initiative selling into balance here. So what does that mean? All that technical jargon. What does that mean? It means that we are likely pushing into a pretty choppy kind of day today. This is very likely to be the case. We're likely getting into an area down here that's going to be relatively two-sided as we push into 38.60 today. I'm really expecting to not trade much today, not to be around much today in terms of trading the markets. I suggest the same. Let's take a look at the NASDAQ for a minute. NASDAQ, same story. NASDAQ exceeded its prior high. This is back adjusted. Exceeded its prior high to 12,300. Same thing, sold off, went deep into the prior range for FOMC, sold off again. You could see that the support resistance like this 11,840 here, not as clean or neat as the ES is, but there's a lot of movement in this product. Yesterday, responsive buying, unable to fill the gap just like the S&P, and we end up with a B-shaped profile. We open at the top of the leg, we close in the loop of the B. This is long liquidation. The NASDAQ holds the range back to November 10th, just like the S&P. So if we go into the NASDAQ composite, here's the NASDAQ composite. It held that low, and we're trading against that low. I'm really expecting this market to be responsive. I'm looking for the S&P and the NASDAQ to fight their way back to yesterday's settlement. So I'm expecting the NASDAQ to push and test 11,457. I'm looking for the S&P to push and test 39.27. So this is what it's looking like. And then from there, if we find a base and start to trade up this flagpole here, this stream, this excess here, this quick. What if we do that? Then we're likely to find the Nasdaq back at 11,800, just like we're likely to find the S&P back. So if we get above this 39.50, we're likely to find the S&P back at 39.90. But I am expecting 27 and a quarter to be tested. If not today, then over the next couple of days. Yes, we've fallen a little bit out of balance, but we've gone from balance to balance here. We've gone from a lot of volume to a relatively Gaussian or normally distributed profile down below, and we're likely to take a bounce back up. Okay, so I'm going to keep my hands off the mouse this morning, and I'm going to, same in the NASDAQ, keep my hands off the mouse. The NASDAQ does not have a beautiful profile down below. Even if I merge these days together, the NASDAQ doesn't have that same model profile like the S&P did. And by the way, this chart is looking at 1 point increments. So I'm compressing 4 ticks into 1 point. Edge Pro X is going to get a small upgrade that allows us to actually trade the NASDAQ in 1 point increments, so we don't have to deal with all the noise, and the profiles would look a little bit smoother. But overall, look today, I really think you should sit and rest for the first maybe 10-15 minutes. I know it's a gap day, and look to see what condition the buyers are likely to be in. I'm expecting the buyers are likely to push for settlement in both the NASDAQ and the S&P. Okay, a quick look at crude. Crude's been, as I said, very, very interesting. Crude has been one-time framing up. It still has this very poor structure day. Has been one-time framing up, as you can see here. Higher low, higher low, higher low. And then yesterday, it broke the one-time framing up and showed weakness. And then here we are today with a gap down. Crude is off about 3%. And crude has 73 as a key area to contend with, and it has single prints under there. But 73 is where crude is likely targeting. Crude got the, this was the key figure, my key over under for crude in my stock zone levels was right there, 76.70 or so. I've been talking about this in the conversion trading chat room for quite some time as I post that homework, and it kind of poked through and it's pulling back. The next area that it's likely to test is 73. So I'm looking for crude to continue to be weak into the 73 today, chop around before the next leg. Okay, so I'll leave you with that. I don't have much more to add here today. As I said, wait and look for the market to be responsive. And there's a decent opportunity for a gap to settle trade. Convergent members, we covered this in depth yesterday in the study hall. We're looking for signs of who is likely to be weak coming into the session. Let the market on open crazies kick in first. Let the first push happen, and then let's see how the second rotation and the third rotation do. And my expectation is it's likely to push higher. It's likely to push through 3,900 in the S&P and start walking to 27. I may be wrong. The secondary scenario, of course, is 3860 below. Okay, don't forget to hit the like button. It is Like Friday. Like Friday. Hit the like button. Of course, you're always welcome to comment on the YouTube video if you like, and don't forget to subscribe and to tell your friends about this channel. Okay, good luck, and I'll catch you on Monday. By the way, I'm off from Tuesday onwards through Christmas. So one more Trader Bite, which gets us to 2,380th episode on Monday. And then after that, I'm going to be off, pulling in some sunshine. Good luck, and I'll catch you Monday. Take care.